Hello, I'm Jim Adams, a long term option seller. Today, I want to share with you how I was able to earn over $2,600 last month selling options using safe option strategies. I'm actually going to go over my trades and I'm going to share some interesting things that occurred last month. So, stick with me. I think you're going to really enjoy what I have for you. Welcome to the Easy Investing Income YouTube channel. I set this channel up primarily as a way to share with people that you can actually sell options in a safe manner and make really good passive income. About 15 months ago, I decided to really learn the right way to do things, and I documented my progress month over month, and I share the details on what worked and what didn't work so that others don't necessarily have to make the mistakes I make and maybe can learn to also do this and makes a really nice passive income. Along with this YouTube channel, I also have a blog where I share even more information, have posts related to how to get started and dig a little bit deeper. So I encourage you to look at the blog. And last but not least is I do have a Patreon page where I share all my spreadsheets and I provide early access to a lot of content, which includes things like I have a planning worksheet that I put out every Monday or Tuesday that details what I'm going to do each week, and I share that to my patrons, as well as I also have other things, especially if the market's changing. I may do a quick post sharing what I'm looking at, what I'm avoiding, differences in my future trading. So I encourage you to take a look at Patreon or my patron page. So that being said, I do have to mention a disclaimer. Selling options can be risky, so please do your own due diligence and understand what you're getting into. So that being said, let's go ahead and jump into the main emphasis of this video. Last month, I was able to earn 26.75, like I mentioned in the beginning of this video, and I was able to do that by sticking to using safe option strategies, things along the lines of using what's called a 20 delta, which means an 80% probability of the option actually expiring outside the money, and then also looking at the specific time frames, also being sure it's stocks that I want to either invest in or that I'm going to sell them at a price or buy them at a price that I'm willing to buy. I typically do not invest in things that I do not want to own. I always want to own them. So that majorly reduces the risk. I also use what's called the options wheel strategy. So, with the wheel strategy, I'm not going to go into a lot of detail. I have other videos that go into more detail. I'll include some links below. But in short, the options wheel is a strategy that you can use. You sell what's called a put on the front end with the purpose of purchasing a stock, but you earn premium. Let me give you an example to make it a little bit easier. So, say I wanted to buy ExxonMobil at $50. Well, I could sell a put, and someone would pay me for that put to sell me those shares at $50. So, I get that premium. If the stock price ever goes below that $50, then it'll be assigned to me, and suddenly I own ExxonMobil, and then at that point I can sell a covered call, which is on the other side of the wheel, and I can again get premium from selling that call. Now, if the price goes above, say the call is at 55, if the price goes above 55, and at expiration they get assigned to me, then I can start the process all over again, and I can sell a put. If it's assigned, then sell a call, and then it comes back. So it's kind of like a wheel. I also, one thing I did change last month is I decided to close all my options contracts whenever I had 90% probability or profit, not probability, profit. So my spreadsheet's a little bit different. You'll notice when you look at it at the very bottom, I have an area that shows where I've actually closed all the different contracts that are no longer out there. And I found this has been a way for me to actually do even better with selling the options. And right now I'm doing that at 90%. A lot of people do it at less, like they may do it at 50% or 60 or 70. For now I'm doing it at 90%. If at some point in the future I may even lower that you know, to see if that increases my income that I'm getting from selling these contracts. The last thing I wanted to mention before jumping into the spreadsheet is the market's been on a tear. I'm sure you guys have noticed the same thing. It just seems to go up and up and up. We did have a down day today, the day I'm recording this video, but I believe we've had probably 80% of the trading days have been up days, whereas usually it's closer to, only 60% of the days are up days and 40% are down days. But we've had a market that just seems to keep going up and up and up, which has limited the amount of puts that I can sell, and that's part of the reason why I've sold more cover calls than puts lately. And we'll talk a little bit more about that in the spreadsheet at the end of the video. So, in short, for my October 21 performance, I did 19 trades. Again, made 26.74. The average trade was $140, and all of these were very passive. I've spent a lot more time creating these videos than I do actually trading. I probably spend no more than a couple hours each week. Maybe the most is 5 hours. But you'll notice as I go through this spreadsheet, I'll share with you the details on how much time I actually spent with each trade. So that being said, let's go ahead and jump in and take a look at the spreadsheet. Okay, now I've gone ahead and I've opened Excel and I've opened last month's spreadsheet. You'll notice it's changed a little bit. I've added a little more color to brighten things up a bit. But let's just kind of jump in. We'll start with the first trade. The first trade was a roll, and I rolled LEG out from. It was expiring on 10/16, and I rolled it out to 11/19, and I did this on October 5th. So for a little bit, I guess it was a little more than 30 days, and I stuck to the same strike. So I really didn't worry too much about the delta. That's why you see 98 or NA, not 98. I don't know why I said 98, but you'll notice the current price, it was at 45.18, which is pretty close to being in the money. So that's why I think it was down for that day. And I believe it stayed about the same. It may have gone up a little bit recently. And you can see I ended up getting some pretty good premium. I made $152 rolling that out, and literally just rolling it out another month to the same strike price with the same spread, the 45.35 spread. So that was pretty straightforward. I've found LEG typically stays in a pretty small range, and it's relatively easy to trade and make some pretty good premium. Hopefully it'll continue to do that. The next one is ARKK, and I'm still trading ARKK. It's one of the ones I've done lots and lots of trades on. For this one, I did another roll. Yeah, this was a covered call, so I bought it to close at 130, and I lowered it mainly because ARKK has come down a bit, and I felt like the delta 0.197 at 120 was a good level to be at. So I did pick up some pretty good premium. Picked up $105 in premium, and didn't take a whole lot of risk. I don't really have to worry about an X date either. So pretty straightforward trade. Also, I did that on the 5th. So on the 5th, I only did two trades, and I made about $260. And I think I jumped on and spent maybe 30 minutes doing that. So not much time. So then on the 6th, I did a roll cash secured put for Big, and that's Big Lots, another company I like to do a lot of work with. So I bought to close the 47.5 strike, and then I sold to open the 45 strike. So I actually lowered it a bit. Big Lots has gone through a little bit of a correction. It's gone down a bit. Here you can see it. It's 42.3. So I was pretty deep in the money with this, but I was able to roll it, and I was able to get another $74 with it, and got it a little bit less out of the, or it's a little less deep in the money. I believe right now it's like 40, it may be 45 currently, so I believe it's completely out of being in the money. But this one definitely was in the money when I rolled it, so I was quite happy to be able to get some premium with it. And that was the 6th. Now I did a roll put spread, so I rolled ABBV, from 10.15 to 11.5, and again I kept the strike prices and the spreads the same, 105 and 95. And I took a little bit more risk with this 0.334, so that's a little bit on the high side for me. That's um, one of the more riskier deltas I've done with one of these trades. But you can see here I did 54. It may have also been in the money. No, it was close to the money, but I was able to get some more premium and did okay with it. So let's see. So the next one is Intel, and I rolled a put spread. Now Intel's also gone through a little bit of a correction recently. I think their earnings weren't the best, or it may have been related to this supply chain. But I rolled it um, from 42 35 42 and a half to 42.35. So I lowered the from 42 and a half to 42 for the call that I sold. And let's see, I did 166, so made some pretty good premium, and I moved it from 10.15 to 11.12, so not quite a month more. And for some reason I did not put the um, delta on here, but yes, you can see that this was also the 6th. And so this was my busiest day of trading, so I did big AbbVie and Intel, three trades. And again, I don't remember a whole lot of details on that day, but I believe it was only 30-40 minutes in the morning to do those trades. So now let's move on to October 7th. I did a cover call in PG, and I sold it to open. And this is one of those, for instances, where I had another cover call that I closed because I got over the 90% profitability threshold. So I went ahead and had closed it earlier. And so I did another one. I did it at 146. At that time, it was at 143. The delta was 0.27. So I did take a little bit more risk. And here you can see why I went ahead and did it when I did it. Um, it had an X date of 10/22, so I wanted to go ahead and um, close it at that point. And then when I sold the new one, I'm out past that and far enough past that X date. I didn't want to sell it and be too, or open a contract too close to that X date, because when I've been burned with assignments, and I've only been burned a couple of times, for I think 3 or 4 times. And again, when I say burned, that's not completely accurate, because I got them at prices. I either sold them if it was a call that was assigned at a price that I wanted, or if it was a put, I got it at a low enough price that I was happy. It wasn't a loss by any stretch of the imagination, and I made $128 for that, so not bad. I did another covered call in Coca-Cola, and you'll notice I sometimes will do a leap. This was a leap, so I said I'm willing to to sell 100 shares of Coca-Cola at $70 in, what is that, almost 2 years from now? Yeah, 2 years from January. And I did this on the 7th. Um, it has a 0.27 delta, so a little bit more risk, but I inherited a bunch of Coca-Cola, and I've shared before. I am willing to part with it mainly to diversify. But again, another good trade. I made $119, and those are the only two I did on October 7th. So again, not a whole lot of time. I think got on and off and did other things. Next, let's jump into October 8th, and we've got the 8th trade was roll a put spread in iRobot. And iRobot has been coming down a little bit too. I think they may be hurt because of the supply chain. They probably can't get some of the computer parts that they need for these robots. I think primarily the vacuum robots. So closed at 65 and 75, and again rolled it to the same spread and the same strike prices. It went from 10.15 to 11.5. So didn't roll it a whole, you know, very far. I rolled it only, what is that, 2 weeks? A little more than 2 weeks. I guess it's closer to 3 weeks. But you can see here, it with iRobot, it's more volatile, so it does pay a better premium. So I made $252. That was probably one of my best trades for the whole month of October. So I continue to still trade in iRobot, even though it does seem like it's trending down quite a bit when the rest of the market's going up. But it's related to the supply chain, and their numbers still look good. It's just a matter of once they figure out the supply chain stuff, they probably will bounce back. Next, the ninth trade, and this is the next week, October 11th, and this is a put spread that I open in XLE, and that's a ETF that's related to the oil industry, and it's something that pays a good dividend. And instead of looking at ExxonMobil as much or Chevron, I'm gonna look at XLE so that I lower the risk. And here you can see I did 52.42, so a 10 spread, so it required $1,000 minus any cash for the trade, and it expires on the 12th. I did this on the 11th. It's literally a zero point 0.2 delta. Again, with puts, they show up as negative, so it's like a negative zero point 0.2, and it just means it's an 80% probability that it'll expire outside the money. And I got some pretty good premium, so I got for that trade, I got $117 in premium, which worked out nice. Um, so now let's move on to. So I only that one trade on the 11th. So again, very passive. Didn't spend much time at all. The next one was I rolled the spread, and I believe this may have been. It may be the same one from that I did earlier. Let's see. I rolled it for 10.15. I did ARC up here. Now this must be another one in my other brokerage. So so I sold to close 107 and 95, and then I did it 105 to 95. So I shortened the spread a bit, and then I also took a lower strike price. So I sold a contract at 105, and looks like I took a little bit less risk, even though that's up there. It's with the it's with this option here, this contract. So 0.2267. So you see, I am taking a little bit more risk. And I did that on 10/12, and I earned 162 in premium. So again, a pretty good trade. And right now, I believe ARKK is right around 118, 117. So it's because of Tesla, it stays pretty high. So I have not had any more issues with ARKK or ARC. I originally had issues when it went up. I think it was like 6 months ago. It went way up to like 170, and my call spreads got in trouble, and that's why I don't do call spreads anymore, or vertical call spreads. I only do vertical put spreads, as you'll notice now. But if go back to my earlier videos, you'll see I used to do vertical call spreads too. So I no longer do those. I feel like they're too risky. So that I did on the 12th. What was that? Only one trade on the 12th. So my 11th trade is a put spread, and it's Cardinal Health, and another company that I'm interested in, similar spread of 10 at 42.50, and the stock is currently at 46. The delta 0.194, so not real risky. And I was able to do $119.40, so a fairly good premium for it. So let's keep going. I did a Now here we get to all my covered calls. I think at this point it's the middle of October, and the market is really starting to go up quite a bit. So I did a cover call on Intel, and I did it at 0.207 delta at 57.50 and 116. I also did one in Corning at 42, and I think Corning, 37.3, and the delta was 0.27. So I like Corning. Corning pays a good dividend. It's a company I like to own. So I don't necessarily want to sell it, but I will if I get enough. If I can get 42, because I could always buy it back. It seems to go up and down and quite a bit, and it's a good healthy company. And I think I mentioned I got 117 for that. The next one, and I think that's no, I did three of these on the 14th. The last one was another Coca-Cola. You can see I tend to like to do these really long. This isn't a leap, but it's pretty close to a leap, 617.22, and I did it at 60 and 0.23, so a little bit higher than the 20 delta I typically like to get. And I did two of these, and I made $194. So again, I own a lot of Coca-Cola, and it's something I'm trying to diversify. And this is one way to get some cash from all these shares that I inherited so many years ago. I mean, the cost basis is outrageously low. So that's all I did on 14, three covered calls. So I didn't spend much time, very passive. Now on the 15th, I did a covered call on, I think this is Realty Trust O, and I did it for 80, and at the time it was 70, and I did it for a point 0.2 delta or a 20 delta, and I only did one, and I made $140, which is pretty good premium. I was going to look over at what my notes said. Fine with 80 in 15 months. So I guess, yeah, it's a little farther out. So I did a more of a leap for this. So like my note says, if I could get 80, it's currently 70. I'd be happy with getting that at that point. But now I believe it's gone down even more. I think it's in the high 60s now, like 67 or something along those lines. So I may end up getting a chance to close any of these positions where the stock price comes down, mainly because it, like I said, it's been on a tear. Everything is so high. Most of you guys probably already know that. So that was on the 15th. I only did one trade on the 15th. Now my 16th trade was the cash secured put in AT&T. This is kind of risky. Something I decided to give it a try. I did it at 18, and this is a leap. But it paid really good premium, $284, and I sure hope AT&T doesn't go down to 18 in a little over. I guess that's 2 years, but it might. Right now, I think it's at 24. It was, what was it, 25.4? I think it's 24 something now, and I'm amazed it's gone that low. Part of it is because they're going to half their dividend when they diversify from the media company that they own. I can't think of the name of it currently. So, and here with my note, if I can get AT&T at 18 a couple years from now, I'd be very happy. Mainly because if it's at 18, it's even with the cutting the dividend by then, it probably will be 6 or 7% dividend. But I think it's really unlikely that it'll go to 18. So hopefully I won't regret that. But for now, with $284 in premium, to me, it was well worth it. And I only did one. Well, did I do? Yeah, I did two of those contracts. Um, the next trade, number 17, I did on 1020. So the AT&T, a lot of these I only did one trade a day and made a fairly good amount of money. So this I did um, ED. I sold it to open at 77.50, another cover call with a little bit more risk. It was currently at 75, so it's 77.50, and I didn't. Looks like it was a little bit less than a month out, but I picked up $100 for it. Since then, it's gotten up to 77.50, so I do think currently it's in the money. So we'll see what happens with that long term. And that's the only trade I did that day. So the next trade I did was IBM, and this is another kind of crazy cash secure put. IBM came out and they had some bad earnings, and they went way down. I think they're in the like 125 now, maybe as low as 120. But I did a cash secured put pretty far out, again, to a leap, 2 years out. But I picked up some outrageous, and this is only one contract. I picked up nearly $380 in premium. Um, and if I could get IBM at 80 in 2 years, that's probably going to be a great price to get it at. So I don't know. This may have been a bad mistake, but time will tell, and we'll see what happens. So, and that's the only trade I did on the 21st. Then I took a whole week, and on the 28th, I did one covered call in Coca-Cola, and again another leap out in 118.24, and gained 139 in premium, and took little risk, 0.185. So you'll notice I forgot to mention the IBM was 0.124, so that's real low risk. That's close to 88% probability that it won't ever get to 80. So I don't know, it might be a little crazy, but at $379, it was kind of like I cannot not do that. So we'll see. It may come back to haunt me. Hopefully it doesn't. So here you can see I did 2674. That sums up the column above, and then here is the closed position. So you can see well, here's the different positions. So as I close them, I figured out what they cost, and then I put the values here, and then it's subtracted um, up here. You can see Q58. So it subtracts it, and that's how it comes to 140, because if you don't include this, and it's more like 2,900. And I found this a little bit easier than trying to track the call, the closing. And this way I can look at all my accounts. With Schwab, you can look on an options page and it can show you anything, the profitability, and I can sort it and I can look to see if there's anything that's over 90% profitable. And if they are, I can just jump right in and close those. And it makes it a little bit easier. Also makes it easier with tracking it on this spreadsheet. So I did have a few notes. So we'll go over the notes real quick. For most part, calls were too similar or better strikes. So I was able to I was able to do well with rolls to similar strike prices. So I do that a lot if I'm willing to get or to pick up a specific investment at a specific price, then I typically, unless the fundamentals have changed, I typically stick to those same strike prices. The next one is due to ever increasing market, I did more covered calls than usual, and that I mentioned earlier. I think we are going to have a little reckoning. It maybe later, the end of this year, or it could be early next. I would not be surprised if it's between a 10 and 30% decrease in the market or correction in the market. So somewhere probably in between those, like a 15 to 20%. Did over 1,000 in my first week of trading. So yeah, literally, if you look back, in my very first week of trading, I did half of what I needed for the whole month, which made it a lot easier. And then as I was when I was doing the other trades, that's why I was able in a lot of cases to do one or two trades a day, for mostly one trade a day, and kept it very passive, and didn't have to spend a whole lot of time. And I stick to the same stocks. I may add one or two here and there, but typically I stick to the same stocks, the same ones I always want to own. Um, Very passive for the most part. Did one or two trades a day, and only on 10/14 I had three trades. So only on one day did I have three trades, and I think those were all covered calls. So covered calls in my mind are really easy trades, fairly easy to work with. Only had one trade on my last week of trading, which is what I was talking about on the 28th. So I didn't do a whole lot of trading, and I kept it relatively simple. Closed over 10 trades during the month, and that's what I was mentioning over here, for a total of 253. So you're talking, I guess it was around $25 per trade. Some of those, I think there were some that were very small amount, but like I said, doing it this way made it easier for me to deal with. Um, More long-term equity. Okay, yeah. What's a leap? The the terms for it is long-term equity anticipation securities, which is that's a mouthful. So I did three or four leaps this month, and that did help increase my revenue or my premiums. Like I mentioned with the IBM, and I did both put leaps and call leaps. Now I knew about call leaps, but the thought that you can say, well, I'm willing to buy, and especially if it's a good company, because in most cases, well, it's not going to most likely drop below a certain price. It can happen, but it's, in my mind, if it's a good quality company that's growing, like Apple, you can do the same thing with Apple. It's very unlikely the Apple will go away, or like IBM, like up here with IBM, the chance that it's going to go down to 80 is small, but it could happen. But if I can get to a fairly good profit with that, if I can get to the 90%, then I will probably close that. So, and then over here to my left, I did Here you can see the amount, and this relates to about a 5.37 yearly return. So a little bit less than a half a percent for this month, which doesn't sound like a lot, but if you're using it to live off of for half a percent for my accounts, which are right below 600,000, is 26,700 what 2,674, which gives me the ability to live off of this with my dividends, and be financially free. So by doing this or not knowing about this, the dividends would not be enough for me to live off of, but being able to make these kind of trades, do these safe options, I'm able to live off this and actually put a little bit away too. So that's it. Here's, my spreadsheet. Again, if you want to become a patron, this is going to be out there for any of my patrons, the actual spreadsheets. And as always, I encourage you to hit that like button and subscribe. My plan to do more videos. I'm thinking next week I'm going to talk a little bit again about my retirement accounts and what I'm doing with them. I've been able to really do much higher returns. I'm currently for November. I think I got 1.5% for just that month, which translates to 19%. So I'll looking at doing a video for that early next week that'll be available before Thanksgiving. So I hope everyone has a wonderful day, and thanks for joining me. I hope you enjoyed this.